So today is Thursday, the 29th of Feb. It's currently about 12:30 Sydney time. It's 9:30 here in WA. The market's fallen, so I'm just going to have a quick look at my positions. And at the moment I've got two open trades. They're both sold puts, cash secured put positions. Two contracts on BHP and two contracts on Rio. My BHP put options have given somebody the opportunity to sell BHP to me for $44.60. The last price of BHP is $43.60, so that's about $1 in the money. But this is a European-style put option, so it can only be exercised at expiry, not before. So I've still got about a month to go before I need to concern myself with being exercised or not, and the objective of this is actually to try and be exercised, so I'm looking forward to being exercised on this trade. My Rio's currently trading at $122.94. I've given somebody the right to sell Rio to me for $116. That's not going to happen. If they can sell it in the market for $122, why would they sell to me for $116? They're not. So that's quite out of the money. I sold two contracts, so I'm probably just going to collect that money and not be exercised. If we have a quick look at the charts, let's look at BHP. It's trading at $43.60 and I have sold $44.60 put options. So here's the chart of BHP. If you'll remember from my previous video, my assumption on this was that BHP's been hitting this support line, trend line, and it's hit it on quite a few occasions. And my gut feeling was it was going to come back down to the trend line, which it's done here, and I suspect that it will bounce around the trend line and then take off again. Regardless, if it does or it doesn't, I have given somebody the opportunity or the right, but not the obligation, to sell BHP to me for $44.60, which is around about here somewhere, which I'm happy to own BHP for. Now, of course, if it doesn't bounce off support and falls down this way, then of course I'm going to be exercised. If it does it around about March, when the put option is about to be exercised or expire, yeah, of course somebody would want to sell BHP to me for $44.60 if they can only sell it in the market for around $42, $43, at which point I can then decide whether I still want to be exercised or if I roll up or roll out the option, in which case I could then just say, oh, well, I'll close that option position and I'll sell a further month option or whatever. In other words, there are strategies that I can implement to fix a trade if it goes wrong. But at the moment, I don't have to worry about BHP because I've still got a month to go on this one. Let's now have a look at Rio. So Rio, that's $116 strike. Rio's currently trading at $122.90, almost $123. That's not rocket science. I'm not being exercised on this anytime soon because nobody's going to sell their Rio shares to me for $116 if they can get $122 or $123 on the open market. So here's Rio. Yeah, it's dropped down a little bit from yesterday. It's dropped down to $123.80. Am I going to be exercised down here at $116 within the next 4 weeks? It's quite possible, but again, I'd be happy to be exercised at $116 and own this stock, because my interpretation is around $116. This is where most of the volume gets traded. As you can see, there's a lot of activity around these areas. So I think the market has gone up and it could potentially come back down to these areas. And if so, there'll be a lot of support. So that'll be a good price to pay for Rio, which is why I sold a put option at $116. And if it doesn't and it continues to rise, I just keep the cash and I move on to my next trade. So in other words, I've checked the market this morning. There is nothing I need to do. There is nothing I need to concern myself with, as in rolling up, rolling out, closing positions, buying back put options. getting ready to be exercised on options. There's nothing I need to do today. So what I might do is just go in and grab some more cash. And in order to do that, I need to look for a stock that I can sell some more put premium on. One stock I'm actually interested in having a look at is Qantas Airways, because Qantas is obviously a big company. It's an airline, Australia's airline. Market cap of about $8 billion, close to 9. Pays dividends. It's a pretty healthy stock, but I think there's been a little bit of bad news. Yeah, this is it here. There's been some bad news. I think there's been some strikes and stuff. I mean, strikes come and go. They're not going to ground the airline and, stop people flying in and out of the country. So they'll have to get it sorted. So on bad news, obviously there's been a bit of a sell-off. People panic and are like, oh my goodness, all my stocks are going to be worthless. There has been a bit of a downtrend in this stock, but on the whole, it's not doing too badly. So, is Qantas a stock I would like to own? Yeah, potentially. Not a huge fan of owning airline stocks. They obviously don't do well in times of pandemics, and they obviously wouldn't do well if an aeroplane fell out of the sky and caused a lot of panic. But this is floundering around at about $5 or so. Is it going to come back up? Potentially, if it bounces off this support line like it's done a few times. So I would like to own this stock around about just below the $5 mark if I could. So let's have a look at some options if I can sell some puts and collect some money here. Currently trading at $5.13, so we're very close to the line, very close to where I'd like to buy the stock. Obviously I wouldn't want to buy it up here, but I would buy it down here. So if I look at put options, trading about $5, just below $5. We're looking at March 21st. What is today? 29th of February. So this is close to a month out, and I want to pay about $5 for the stock, but not for 5 cents or 8 cents. So I might have to come down to a further month, down to April. That's 9 cents or 12.5 cents. May, 12 cents, 17 cents. Not really worth holding out an extra month for 12 cents when I can get potentially 10 or 12 here at $5. Let's have a quick look. Now these are American style put options, a contract size of 100. So let's just say I would sell to open, sell, bid offer 12.5, bid is 9.5. So let's put in 11 cents. Well, let's put in 12, so I'd be lower than this guy. How many contracts do I want with a stock that's going to be trading at, what's my $5 exercise? I'd have 1,000 of them for $5,000, so that would be 10 contracts. Not really worth doing. $120 less premium, $83. Maybe I'll do 15 contracts. Yeah, $142.92. It's not a massive amount of money, but it's still money, and it's still cash up front for a stock that I'd be happy to own at $5. So yeah, I'm going to proceed with that. 15 contracts, that's going to put me in the market for about $7,500. $142 now. That's close to 2%. If you think about buying 1,500 stocks for $5, that's obviously $7,500 outlay from my part. And if I'm collecting $142, that is 142 divided by $7,500 times 100 is 1.89%. So it's close to 2% on my money for a quick trade. So yeah, it's worth doing. So I'm going to execute the trade, put in my trading password, and submit the order. Am I happy with all this? Yes, I am. Okay, so I am going to sell to open 5 put options expiring 18th of April, which is a couple of months away. It's not my preferred choice to trade so far out, but it's $143 in my bank account. and now I'm sitting on the sidelines waiting for potentially exercise of this trade, which means I will then buy the Qantas shares, which I can then sell call options over to collect more money. Or I don't get exercised and I just pocket this money, whatever. Not phased by it. The order's been submitted. Obviously it's not been executed yet because I've put in a price away from the money. But if I look at my orders, outstanding orders, and then I just wait to see if this goes through to the market or not.